Trading with the trend is a viable part of any trading strategy, but you have to keep in mind that the trend is going to eventually end. And as a trader, it does not hurt to have a few tricks up your sleeve to be able to tackle different market environments. Counter trend trading, that's something you can do once you see a sign that the trend move, the impulse move, is running into issues. If you go back to the basics of a trending market, we have the impulse or the momentum move, and we have a pullback in the price. Understanding this structure and the clues it gives you can really improve your trading results. Now, virtually every chart you're ever going to see is going to have a pattern similar to this. It's standard price structure in a trending market where, in an uptrend, the impulse moves are larger than the pullbacks. And you can see a rhythm in price, and nothing interesting is going on except an orderly advance in the price. Traders that are focused on the uptrend would trade the ending of a pullback or a breakout to new highs. And in this graphic, there's nothing suggesting that counter trend trading is the play to focus on, although there are always those people that are going to attempt to short any pause in the upward trending action. Those people love to attempt to capture the tops or the bottoms of markets, but they just end up adding to a losing position and taking larger than necessary losses. Now, there's going to come a time when price will run into issues during the advance, and it is during these times that a counter trend trade may present itself. We have price going parabolic here, and even breaking into a range after a sharp move upwards. We have a change in state compared to recent price action, and this should have a trader paying attention. Was it time to short? Well, if high probability trades are your interest, counter trend trades right now may not be the proper play. You don't want to just short a pause in price, but you need to see further price action to show that the bulls have lost their steam. Now, oftentimes what can happen after these types of moves is price will just consolidate, as we see here in the graphic. It works off the overbought condition, and it starts to work its way in the direction of the trend again. So the best play right now is no play. And you probably would not want to trade the first pullback after this type of move due to the extreme state of the market at this point. So we need to see other things occur. Here, price had printed an interesting event to the upside, and now price prints a interesting event in the pullback. If you compare the lengths of pullbacks, you can see that the last pullback is much more violent and larger than any of the previous ones. This indicates much more selling pressure than this trend had previously encountered. Are the big players showing their hands? Would you be looking for a long position at this point? And hopefully, you just said you would need to see more evidence of upside potential, but at this point, buying into this market is not a solid play. Well, what about shorting? Well, let's think about what has happened here. There was an orderly uptrend of price. Price began to print a parabolic move, which should put you on alert. Price began to consolidate in a trading range. An out-of-character pullback has occurred. If you tie that all together, now there is a bigger potential of at least another correction in price, which you may want to get involved into the short side. And if you trade pullbacks and trending price action, one thing you look for is intent in the upward move. And the reverse is the same. If you're trading a downtrend, you want a strong impulse leg going short. If you look back at this graphic, we actually have a strong move in price to the downside, and that fulfills our condition of a strong impulse leg. It is possible that this is a major trend change, and shorting the first pullback here could be a great trading play. We don't know if this is a change in trend, but we can certainly short this type of market and be conservative with our price targets or risk. And depending on your time frames, you may have to drop a time frame or two lower to actually see this structure play out. Larger time frames can often hide the details that you are able to capitalize on. And as price advanced on this chart, the first three pullbacks in price are virtually identical in terms of distance. The last pullback has a different look to it, and this is the largest pullback in the current move of price. You can see that price had a strong push up, a reversal type of candlestick, and then momentum drove price down. This is the type of price action that you want to see if considering taking a trade counter to the prevailing trend. Now, there is a way to potentially take advantage of a market that's in consolidation after a big price run. Although consolidations at the highs of momentum are generally hinting to further trend direction, there is a pattern that we can look for to trade in a counter trend move. When a market moves with momentum and consolidates, I am still biased in the direction of the momentum thrust. But if during the consolidation, I see price test the extremes high and fail, I consider a position for a breakdown from consolidation in the opposite direction of the thrust. And you can see here where price pokes above the highs and it's rejected. As higher prices were tested, they were rejected. And this tells me that the probability lies with demoralized buyers and profit taking can ensue. Add to those who play the breakouts and get their stops hit, and those wanting to pile in short, including the buyers that are demoralized, I look to enter and watch price action to ensure adverse moves against my position are acted upon. Remember that trading is about putting the odds on your side and trading in the direction of the higher probability move. Counter trend trading just for the sake of doing it, that's not an edge. Understanding price action, what the moves mean, and taking advantage when price is hinting at the next move, that's smart trading. And at all times, ensure that risk management leads the way in any trade that you take.